If you're thinking about incorporating your business in Ontario, Canada, because someone told you that it's automatically going to save you thousands of dollars, I want you to stop and just think about that for a minute. Because that advice could end up costing you thousands of dollars if not done correctly. My name is Jolly Sharma, and I'm a partner with M6 Management. And today, let's follow the money. If you're starting a growing business in Canada, you've probably heard someone say, hey, just incorporate, you'll save on taxes. Sometimes that's true, sometimes it's completely wrong. The problem is that many of the business owners like yourselves are repeating advice that they've heard either from a friend or another business owner, sometimes in person, obviously, and sometimes through social media. And understanding whether it actually applies to your situation, that's really very, very important. And today, what I'm going to help you is I'm going to walk you through 6 questions every Canadian business owner should answer before deciding whether to incorporate or not. Let's imagine someone, we'll call her Sarah. Sarah owns a plumbing company in Ontario, and the business is doing quite well. She's getting lots of customers. And one day, one of her contractors comes to us and says, Sarah, you should incorporate. You're going to save a fortune in taxes. She gets really excited. But the question is it really the right business decision? Let's follow the money. Question number one, why do you actually want to incorporate? Notice I didn't say, do you want to save taxes? I asked, why do you want to incorporate? Are you trying to grow your business? Or are you trying to hire new employees? Are you trying to bring in new partners? Or are you trying to build a business that you're eventually going to sell? Or are you simply incorporating because someone told you to do so? Your business goal should drive your decisions, not a rumor, not a myth, and definitely not an advice from someone whose business could be completely different from your business. Question number two, and here is one of the biggest misunderstandings that I've seen. What is the difference between profit and cash? And let's follow the money. Money comes into your business, but then you've got to pay all your expenses like your suppliers, your wages, you've got to pay for rent, you've got to pay for software, you've got to pay for insurance. You've got dozens of business expenses. What's left becomes your profit. And just because your accountant says that you've made a profit does not mean that you have that money sitting in your bank account. I've seen businesses that have looked profitable on paper, but have actually struggled to pay their bills because of cash flow. Understanding the difference between cash flow and profit is one of the most important financial decisions you would need to factor in before you decide if you want to incorporate or not. Question number three, how much money do you personally need every year? This is a question many people never ask. If almost every dollar that you actually make in your business needs to come home to pay your mortgage, your groceries, your children's activity expenses, and other family expenses, which is very different from a situation from someone who can leave money in the business for future growth. That's why there's no one size that fits all. Your personal financial situations need to be considered before you decide if you want to incorporate or not. Question number four, where do you want your business to be in 5 years? That's another important question to be answered. Do you want to stay a one-person operation, or do you want to hire a team? Do you want to open another location, or do you want to buy equipment? Or do you want to expand into other locations? Those are the goals which really influence your decision to incorporate or not. And most importantly, tax planning should support your business strategy, and it should never replace it. Question number five. Another myth I hear all the time is if I incorporate, I'm going to be protected from everything. Unfortunately, that's just not true. A corporation isn't a magic shield that's going to protect you from everything. Good contracts, good insurance still make a huge difference. And obviously, good bookkeeping matters. Good business decisions are needed on a daily basis. Incorporation is one of the tools. It's not a complete protection. Number six, finally, remember that incorporation also comes with responsibilities. You've got to file corporate tax returns. You've got to do your annual filings. You've got to manage bookkeeping and payroll if you have employees. Keeping proper records and taking responsibility for your time and money is important factors. So looking into the possible advantages of tax also comes with certain responsibilities that are very important for you to make that decision. Now let's follow the money one last time. Money comes into your business, expenses are to be paid, profit is calculated, taxes apply. Then you decide how much stays in your business and how much actually comes out of your business to you personally. Once you understand that flow, you'll make a much better business decision. And that's why two businesses earning the exact same amount of revenue can make completely different incorporation decisions. Remember, incorporation isn't simply a tax decision. It's a business decision that has tax consequences. Don't make the decision just because someone else did. Make the decision because it's the right decision for you and your business. If you're still unsure of your situation, if you want to incorporate or not, give us a call at M6 Management. We are happy to help Canadian business owners understand their numbers and make better financial decisions and build a stronger business. If you found this video helpful, please feel free to subscribe to this channel. We'll be sharing practical videos about Canadian businesses, CRA topics, bookkeeping, tax planning, and of course, financial management, all designed to help businesses grow in Canada. Thank you.